Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Happy Thursday, happy Initial Claims Thursday. We'll take a look at the 8:30 reaction to the initial claims here in just a moment. What we have obviously every morning is taking a look at those scheduled events, taking a look at those hot zones, because gang, for as much as a lot of folks might say ignore the news, that's only partially true. It sounds cool to say ignore the news, but the truth of the matter is there are certain events that are not news headlines, that are actually data releases, right? And those data releases will change the way that investors and traders think about what the Fed's going to do, what the health of the economy is, and prices will adjust to that opinion, right? So I know it's kind of cool to say ignore the news, but to a certain degree, and depending on your time frame, you can't, right? If you're day trading, ignoring the news, it's going to cost you a lot of money. If you're on a short-term swing trade, ignoring the news could cost you entries and exits. On a daily or weekly, there's a pretty good chance that news is being absorbed by just the sheer range of a daily high to low or of a weekly high to low, right? So there's a pretty good chance that there is a shock absorption, if you will, happening with those time frames. But when you take a look at what happened at 8:30, that's a big candle. This is a 5-minute chart, by the way. That's a big candle, right? And that candle represents opinion. And then there's oftentimes going to be a reaction after that. So it's good to know what's coming, if for no other reason than we know that if there is a major event, to at least think about how much latitude we need to give a position. We can sort of prepare for an expected amount of volatility at a scheduled high impact, high volatility, high volume event. I call them hot zones, right? And I think that knowing the hot zones, whether that be a data release, Fed speaking event, Fed meetings, earnings, these are all hot zones, right? Okay, so I hope that makes sense. All right, so let's see. What else do we have here? Let's take a quick peek at the NAS in the wake of that move. So a lot of folks might ask, Rob, didn't initial claims show that they were greater than expected? Because I get this question too, and it's a great question. Is bad news good news? Is good news bad news? All that good stuff. All right, let's move the clock over just a little bit. Scroll on down to Thursday, and you'll see here unemployment claims 8:30. I didn't even refresh it. Why? Because I don't really care what the number is. Hot zone is more an acknowledgement of the time and what the hot zone is about, in this case, jobs. The number came in at 261,000. Why does that matter? It doesn't at first. It will later on. But the bottom line is, why would equities go up if there were more unemployment claims than expected, right? Not only than expected, but then previously posted. Why would that trigger a move to the upside? Because bad news is good news in this environment, gang. What does that mean? Bad news is good news. If we have data that suggests that Jerome Powell and company are breaking the economy, they're hurting jobs, etc., well, then the expectation is that they're going to stop it, right? Well, right now are rate hikes. So the expectation is when bad news comes out, that should make, consequently, the Federal Reserve a little less hawkish, right? And so while we see that June is definitely a pause or a hold month, July is still up for grabs. That's still far away. That's July 26th. It's only June 8th, right? So it's July 26th. But looking further out, there is still a possibility, and it's the higher possibility for a potential rate hike. So that hasn't changed, but we continue to see higher and higher expectations lingering in the mid to low 70% expectation for the Federal Reserve to pause in, as we can see here, about 6 days. Okay. Chances are, a lot of folks are going to say the meeting is, this decision is going to go until the very end of the meeting. Probably not. Once we tag 80%, that's pretty much what we're going to get. These Fed fund futures and these probabilities from the good folks at the CME group are really just that accurate. Okay, they're not predictions, by the way. They're reflections of traders that are trading a futures contract called the Fed Fund Futures. All right, so there's that quick breakdown of the morning. And let's go ahead and jump into the questions. We have folks from our training room. We also have our YouTube, Facebook, and my Twitter feed. Great to see you all. First up, hey there, Ann. Good morning. Yesterday's charts and coffee analysis on Tesla. Oh, very cool. Tesla, let's pull that up there. Ann, help me make money. Oh, very cool. What did you end up doing? Um, it's been moving higher. Very cool. We like to keep with the path of least resistance and super stoked. Super stoked. You did all the heavy lifting though. Uh, thank you though. I appreciate it. That's awesome. That is awesome. Thank you for the feedback. All right. Next up, Andrew. Good morning. What hours of the day do I day trade futures? Yeah, great question. So most of my life, gang, is optimized to, here's the thing. My sister is a night owl, right? She doesn't even start to function well till it seems 10 p.m. at night. I'm already asleep for an hour. Okay, why do I even bring that up? Andrew, a lot of what we need to do around the hours that we trade, we really got to be honest with ourselves and ask, when are we cognitively, firing on all synapses, right? When are our synapses firing? For me, 4, 5, 6 a.m., 7 a.m. to about noon, I'm pretty good. That's definitely my power band. So I've optimized my trading life around that. Now, I also happen to think that has been incredibly advantageous. So again, the question is, when do I day trade futures? I think that power band has been very advantageous to what I also believe are the best trading hours of the day for a day trader, which is really the open to about. So I like to day trade. My favorite day trading window, and there are three of them that I consider. My favorite day trading window starts at the bell and goes to about 10:35 Eastern. It's a much more truncated window than I have used throughout my career. And we're talking 20 plus years at this point of day trading specifically. Um, I did swing trading and end of day trading before that, but day trading specifically, that hour and 5 minutes is great. I would like to get it back out to the full window, which is 9:30 to 11:30, right? But 9:30 to 10:35 right now has been working really well. So I'm optimizing around those hours, which is why in the Sector Secrets Mastery, we start off every morning with an hour and 5 minutes of day trading. So that's my favorite time. And I think that's probably one of the better times for the broadest group of traders. All right. So moving on to our next question. All right, let's see what we have here. Good morning. Good morning. Hey there, Jim. You warned us yesterday, and the Canadian rate increase seemed to have started the NDX rollover yesterday. Thanks for the heads up. Yeah, so right back to hot zones. What are those scheduled events? Thanks, Jim. No, I appreciate that. Thanks, Ann. Thanks, Jim. No, I appreciate that. It's kind of my job and my pleasure. Um, Bank of Canada has been, when we look at a calendar that is beyond just hot zones in the US, and we start thinking a little bit more globally, we start thinking about those G7 and G8 central banks. Bank of Canada has been really impactful in terms of what it is that we are dealing with volatility wise when they make decisions or comments about their monetary policy and their economy. It might have a lot to do with they're a significant trading partner. It's geographic proximity. There's a lot to it, but it does seem to be one of those hot zones that makes a lot of sense to keep an eye on. And I'm sure there were other factors, but for sure at 10 o'clock at the end of the clearing period, there was definitely a reaction, right? Yeah, I'm with you. I'm with you. All right, awesome. And kudos for keeping an eye on it. I think a lot of folks don't know about these hot zones because they're looking at a calendar that's just US based, which is why I recommend forexfactory.com, their calendar, or even the calendar from tradingeconomics.com. All right, and that comes from my years of Forex trading. All right, next up, Pat asks, can we take a look at Meta? Yeah, let's take a look at Meta. And I'm going to do something a little different too, or a little bit more too. So let's start with Meta. And this is very much part of the index sector stock approach that I encourage traders to consider when they're day trading, swing trading, anything. Meta has been on the daily time frame in an uptrend since the middle of, as you can see back here, February. This is an established uptrend, nothing but green grab, which stands for green, red, and blue candles. So this is definitely an environment where I would consider a buy the dip. One thing I would mention, we dove deep into this yesterday on the tech sell-off that we saw yesterday. Are we seeing some sector rotation? Are we seeing that the strength in tech, namely communications and tech, XLC and XLK, are we seeing a little bit of sector rotation? Gang, I do not believe we can foretell sector rotation because that goes back to my belief that no one can see the future when trading. Although apparently everyone on television can see the future, kudos to them. The rest of us mere mortals, we have to see what's happening and then we can respond. However, I think we can narrow down the candidates that are most likely to rotate, meaning what are the sectors that are strongest, outperforming, and what are the sectors that are lagging, underperforming? That tends to be a lot of times where that rotation happens. I like to look at it as the top of the Ferris wheel and the bottom of the Ferris wheel. The folks at the bottom will eventually make their way up to the top and the great view, and the folks at the great view will eventually cycle down to the bottom. That's the way these things work. So if I look at Meta, let's keep in mind what happened with the NAS yesterday. Is there some rotation out of technology, which is just to say, some profit taking, and that profit taking then finds itself being used in places that we can expect might have more potential upside follow through. All right, here's the NASDAQ holding. If the NASDAQ can hold after yesterday's sell-off, that would bode well for XLC. XLC is the sector that Meta, Facebook, is heavily weighted within. So keep an eye on that index sector stock, or if you want to do it the other way around, as long as you cover all three, you're good. If you want to go Meta, XLC, NAS, cool. I prefer NAS from largest to smallest, NAS, XLC, Meta. But we really want to see those moving together, right? Because the tide, the larger group, the NASDAQ and XLC are definitely worth watching because they will impact Meta. But I'm still in buy the dip. I'm likely going to be a little bit more conservative because it does look like there's a little bit of rotation going on. All right, which might ultimately just give us some reversions to the mean, which is fine with me too, right? All right, Jody asks, Amazon and Google, thanks so much for all I do. My pleasure. My favorite part is the first 5 minutes with your assessment of the overall markets. Thank you, Jody. I'll tell you what, I sit here, talking to the camera and talking to the mic, and I can see your questions, but I never really know what hits, what is valuable. So I appreciate the feedback. Amazon's in dip mode, overall uptrend. And by the way, I'm using TradingView charts right now. Love these charts. They're fantastic. Notice how it's pulling back into the daily price movement range zone. What is that? That is historical volatility based on 6-month lookbacks and specific day of the week rhythms for price movement ranges. So that's our daily historical movement. Sinking right into that zone. A little bit of a volume ledge kicking in right around 121 as well. I'd keep an eye on maybe a minor low or inside candle, but I do like Amazon for a buy potentially on the daily. But if we're going to do index sector stock, NASDAQ, XLY, Amazon, right? Now, Google takes us back to that meta hierarchy, NASDAQ, XLC, Google. Google too is pulling back, and you can see here we are pushing the boundaries. Sorry, gang, my glasses are just feeling some kind of way today. The Google is pulling back through the historical price movement range. These levels are not impervious. They're just showing us the 68% probability of what price movement could do. Therefore, it's a container, if you will, for where price could go. Could we get out of the container? Could we escape the container? Of course. But when we see a candle, and this is important, gang, candles of unusual size. Yes, tip of the hat to one of the greatest movies ever, The Princess Bride, and the rodents of unusual size. When we see a candle of unusual size, a candle larger than the 5 to 7 that preceded it, something different as opposed to normal psychology is going on. If something different's going on, it merits us at least tapping the brakes to make sure we're not, motoring into a storm here. Candle of unusual size makes it, for me, makes it then, if I go down the sequence, makes my next step inside candle, minor low, one of those two, to make sure that whatever caused that is tapping the brakes. If NASDAQ taps the brakes, if XLC taps the brakes, then likely so too will Google. So I do like a buy. I would definitely want to wait for an inside candle or minor low pattern. And both of those are price patterns, gang. I'm not a big fan of chart patterns. I don't use them as much. I'm a big fan of price patterns, which is to say using different patterns of open, high, low, close, more objective rather than connect the dots with trend lines and so forth, right? So I would keep an eye on one of those two price patterns there. All right, next up. Hey there, Rainy Days. What do you think about AT&T? Was pretty beaten down recently, has been moving up a bit. AT&T is in a downtrend, right? And AT&T is below the 200 propulsion, so it's on the southern side of the equator. It's in the bearish hemisphere, and a pop higher in a downtrend is usually going to be a rip that I will short into. If there are buys in, well, let's do the same thing. Index sector stock. What is AT&T? Yeah, it's XLC, but it's also more specifically IYZ. The telecommunications sector is a dumpster fire. It has been since the end of April. So typically, if I'm looking at T within the context of IYZ, the telecommunications sector, I would probably remain still bearish. It is in a downtrend. It has closed a gap. But just like any candle of unusual size, it would make sense to possibly wait for a pause, but I'd be far more bearish. So it had a rip higher, right? But overall, having rips higher in the context of a downtrend still makes it an opportunity to short than it is an opportunity to buy. Now, if you're thinking, Rog, are there any buys in this corner of the market? Let me show you what I would do. And this is what I do. And this is what we do in the Sector Secrets Mastery. So I'm going to open up a multi-chart of telecommunications. So this is a high concentration weighted sector. There are a certain number of stocks weighted in a particular order with high concentration. And I'll ask myself, if I want to be a buyer here, Rainy Days, is there anything stronger? Is there anything above the 200? Cisco comes to mind. Comcast comes to mind. Even Roku broke the 200, right? Are there shorts? Yeah, TVZ and TMUS would be on that list. So if we can take a look, right? If we can take a look at individual stocks within a sector and say, okay, this would end up on my bearish watch list. This would end up on my bullish watch list. I would say, generally speaking, while T could rise with an overall tide, I'm going to say, hey, is there anything at least neutral that I could make a bet on and have a higher probability? So, for example, Comcast had a pretty good day yesterday too, right? And it's above the 200. So I'll probably have a little bit more favoritism to those neutral stocks. But ultimately, when we're looking at probabilities, market structure, is it up, is it down, is it neutral, is going to be the first place I start building the watch list from. And the watch list dictates what type of trade, long or short, puts or calls, that I'm going to want to execute. All right, gang, as always, Joe, yep, as you wish. Yeah, great movie. I love it. Okay, gang, as always, thanks for being a part of the Caffeinate and Dominate crew. Be good to each other. I'll see you tomorrow, same time, same station.